Greetings and welcome back. We are continuing with our studies in taxation. The topic is value-added tax. Today we are going to discuss the types of supplies in the context of VAT in Kenya, because understanding the different types of supplies is fundamental, because that then determines whether VAT should be charged. It also determines at what rate the VAT will be charged and what implications it has for claiming input tax. So the VAT Act of 2013 categorizes supplies into three main types. One is standard rated supplies. We have the zero rated supplies and exempt supplies. So we're going to try and understand all these types of taxes, beginning with the standard rated supplies. There are three main types. One is standard rated supplies. Standard rated supplies candidates are goods and services on which VAT is charged at the standard rate that is prescribed by law. So standard rated supplies refer to goods and services. It refers to number one, goods and services on which VAT is charged at the standard rate. So supplies are goods or services, and standard rate supplies then will refer to goods and services on which VAT is charged at the standard rate that is prescribed by law. And the current standard rate in Kenya is 16%. We are doing this recording in the year 2025. So in the year 2025, the VAT standard rate is 16%. Now, what are the characteristics of these supplies? Characteristics. This is the definition of standard rated supplies. What are the characteristics? What are the key characteristics? Number one, VAT is charged. These are supplies on which VAT is charged. You understand? The supplier must add 16% VAT on or to the price of the goods or services and then collect it from the customer. So if MP, Manifested Publishers, is selling books at 1,500 Kenya shillings, if this is the cost or the market price, exclusive of tax, then Manifested Publishers has to add a 1.16 on these goods, and this will be around 1740. You understand? The supplier must add 16%. So 16% is added to the 1,500 to arrive at a VAT inclusive invoice price. Then the company, the VAT registered person, will then collect this VAT from the customer, because when the customer buys this book, it is inclusive of VAT. So this seller would collect this VAT from the customers. That's the first characteristic of these standard rated supplies. VAT is charged on these supplies. VAT is charged on these supplies. That's the first characteristic. The second characteristic is input tax is recoverable. 2, input tax is recoverable. What does that mean? When we say input tax is recoverable. Now, a VAT registered person making standard rated supplies can claim deduction for the input tax they incurred on purchases and expenses that were used in producing these supplies. You understand? And that is the essence of VAT. A VAT registered person, I'm repeating, making or selling standard rated supplies can claim a deduction for the input tax they incurred on purchases and expenses used to make the supplies. And that is the core mechanism of VAT, where the tax burden is passed on to the final consumer. So if we have, let me use the example I gave, we have manifested publishers that is selling books, VAT inclusive, the price is 1740 per book. These are shillings. In publishing or printing this book, manifested incurred some costs, what we are calling input. A VAT registered person making standard rated goods or services can claim deduction for the input tax they incurred. So when manifested bought papers to publish these books, the price was inclusive of VAT. Maybe a ream of 1,000 shillings inclusive of VAT, of say 1,600. Because 16% of 1,000, if the cost of a ream is 1,000 and the VAT is 16%, then the input price here, the cost and VAT inclusive, the VAT will be 600 shillings. So manifested buys this paper at 1,600 VAT inclusive. So we're saying here that manifested publishers that is selling standard rated supplies, books, at 1740 VAT inclusive can recover input tax that was paid by manifested publishers when buying this paper. This paper is an input. We have other services, expenses candidates. These are supplies and services and expenses. So a VAT registered person making standard rated supplies can claim a deduction for the input tax that they incurred on purchases and expenses used to make these supplies. And that is the core mechanism of VAT, where the tax burden is passed on to the final consumer. So here manifested paid VAT on this input supplies. Then that VAT of 16% manifested has to recover it from the final consumer. It is the final consumer who finally pays the VAT. That's why VAT is sometimes referred to as a consumer tax. You understand? That's the second characteristic of standard rated supplies. Another characteristic is output tax. The output tax sometimes can be greater than the input, should be greater than the input. The output tax should be greater than the input tax. Generally, for businesses dealing with predominantly standard rated supplies, the output tax, which is the VAT collected, will be greater than their input tax, which is the VAT paid. The VAT paid when buying the papers by manifested publishers, when you compare with the output tax, we are saying that the output tax will be greater than their input tax, which is the VAT paid, resulting in a net payment to KRA. So output tax should be greater than the input tax. Then if that then happens, the VAT registered person is required to pay. There will be a money that will be remitted to KRA because the output tax is greater than the input tax. But if the input tax is greater than the output tax, then there is no money that will be paid to the government. It is the government now to refund the registered tax agent. So these are three core characteristics of standard rated supplies. And the examples of standard rated supplies include most manufactured goods, furniture, electronics, clothing. Most manufactured goods attract this standard rated tax of 16%. So one example I'm giving is the manufactured goods like electronics, furniture, clothing, and so on. Then we have restaurant and hotel services. Of course, there could be some specific exempt items. Professional services also attract those providing professional services like accounting, law. They are required also to pay VAT, excluding we have examples are legal services, accounting professional services, consulting, architectural, engineering, and so on. Telecommunication services is also another example of standard rated services or supplies. Telecommunication services. We also have electricity for commercial use, fuel, petrol, diesel, motor vehicles. All those attract VAT. You understand? So that is one type of supply, standard rated supplies. Then the second one is the zero rated supplies. Zero rated supplies are taxable supplies on which VAT is charged at the rate of 0%. These supplies VAT is charged at the rate of 0%. VAT is charged at the rate of 0%. Now, while the rate is 0, they are still considered taxable supplies. The rate is 0, but they are also still considered as taxable supplies. Characteristics. These are zero rated supplies. What are the characteristics? Let me move to page 2. Characteristics of zero rated supplies. Now, the first characteristic is that VAT is charged at 0%. 1. VAT is charged at 0%. VAT is charged at 0%. The supplier does not collect any VAT from the customer on these supplies. Then number 2, the input tax is recoverable. Input tax is recoverable. Input tax is recoverable. You understand? First of all, the supplier does not collect any VAT from the customer on these supplies. Number 2, input tax is recoverable. Despite charging 0% VAT, a VAT registered person making zero-rated supplies can still claim a deduction for the input tax they incurred on purchases and expenses related to making these supplies. And because of that, they often lead to refunds. It often results in refund. Often results in zero-rated supplies. Often results in refunds. Because no output tax is collected, but input tax is recoverable, businesses predominantly making zero-rated supplies often find themselves in a VAT refund position. This is where input tax exceeds output tax, meaning that KRA owes them money. Or policy objective. There is a characteristic related to policy. Zero rating is often used to make certain goods or services more competitive. For example, exports, or even to reduce the tax burden on essential services or goods, because the final consumer does not pay VAT. You understand? It's a policy decision. Now, currently, examples of zero-rated supplies subject to changes in Finance Act would be things like exports on goods or services, like goods exported from Kenya or services supplied to a person outside Kenya, excluding certain services like financial services. And that's the most common example of zero rating globally. Exports of goods or services. We also have certain agricultural supplies. We have specific unprocessed agricultural products as listed in the law. We also have supplies to export processing zones and special economic zones. Goods and services supplied to licensed EPZ enterprises or supplies to export processing zones within Kenya. Those are zero-rated supplies. Another example is the international transport services. Transport of passengers and goods by road or air outside Kenya. There could be also certain goods that are used in exploration and production of oil, production of gas or mining. You understand? Yes. Those are examples of zero-rated supplies. Examples of zero-rated supplies. Examples of zero-rated supplies. Candidates, we are discussing types of supplies. We are discussing types of supplies. Types of supplies. Then we have the third type of supplies is what we call the exempt supplies. Exempt supplies. C. Exempt supplies. Now, what are these exempt supplies? These are goods and services that are not subject to VAT at all. Are not subject. These are supplies that are not subject to VAT at all. Exempt. They are outside the scope of VAT and no VAT is charged on their supply. What are the characteristics? Characteristics. What are the characteristics of these supplies? Number one, no VAT is charged. One, no VAT is charged. No VAT is charged. The supplier does not add or collect VAT on these supplies. Two, input tax is not recoverable. Input tax is not recoverable. A VAT registered person making exempt supplies cannot claim a deduction for input tax incurred on purchases and expenses used to make these supplies. And therefore, the input tax paid on inputs for exempt supplies becomes a cost to the business. It therefore becomes a cost. That may also imply that there is no VAT implication. No VAT. There is no VAT implication. For businesses dealing only in exempt supplies, they are generally not required to register for VAT, regardless of their turnover. And of course, there is also a cascading effect. Cascading effect of exempt supplies. What does that mean? It means that because input tax cannot be claimed, VAT on inputs for exempt supplies effectively becomes part of the cost, which can lead to a cascading or a compounding effect of tax, as tax is hidden within the cost. So these are three characteristics. Examples of exempt supplies in Kenya, we have financial services such as banking services, insurance services, except for certain specific services like fund management or other consulting services. We have educational services. These are services provided by education institutions like schools, universities, colleges, and so on. We may also have medical and veterinary services. These are services provided by hospitals, clinics, doctors, and veterinary practitioners. Another example is public transport of passengers, buses, matatus, trains, domestic air travel, and so on. Those are services that are exempt for VAT purposes. Residential rental income. This is income from the lease of residential property. That's another example. Transfer of land and buildings. This is the sale of land and buildings other than new commercial buildings or certain specific developments. Those also are exempt goods and services. Burial and cremation services are also exempt supplies. Postal services, exempt, and so on. So these are the three types of supplies for VAT purposes. Three types: standard rated supplies. Number 2, zero rated supplies. Number 3, exempt supplies. So knowing this distinction is very critical, is very important. It's important to understand the classification of supplies because of various reasons. And candidates, why do you think the classification of supplies is crucial for VAT? If you are to be asked, why is the distinction of supplies crucial? The obvious answer one could be VAT registration. This classification determines if a business needs to register for VAT. Just as we have seen here, no VAT implication. Companies that are dealing with the predominantly exempt supplies are not required to register for VAT purposes. So if you are dealing with goods, it's important for you to know if the goods are standard rated, if the services are zero rated, or if they are exempt. That will help you make a decision as to whether to register for VAT or not. That's one reason to understand the classification. Another reason is the input or even just pricing. Before you get to the input tax recovery, we have the pricing. Pricing. After how do we explain pricing? Pricing, we can say the pricing affects, okay? The classification affects the pricing strategy of goods or services. Another reason is for input tax recovery. This classification determines whether a business can claim back VAT on its purchases. There is also the aspect of VAT returns. It ensures that there is correct declaration of output and input tax in VAT returns. So businesses in Kenya must accurately identify the types of supplies they make to ensure compliance with VAT laws and avoid penalties. So that's why here we are studying the types of supplies. As an accountant, you need to understand the various classification of supplies for VAT purposes. Thank you for attending the lesson. In our next session, we are going to study the VAT rates, and we'll also work out some computations regarding VAT. Bye-bye.